screen for a few moments, and if you can just have a read through that, it would be much appreciated. Just another few seconds. All right, let's bring up our market commentaries disclaimer, and I'd like you to have a read through that as well. I'll keep that on screen for a few moments. All right, terrific. Let's go ahead. Let's start with our real rate, and let's bring up the tab. And hey, Raj, good morning to you. Welcome. All right, and what do we have on the weekly chart? So we just want to do some sort of analysis. Let's bring in some arrows, and we want to just sort of see how the right chart, the right-hand part of the chart, is behaving. So this is last week's candle. This is this week's candle. We've gone through 60% of the week. How are we looking? Well, we're looking pretty uncertain in terms of the yield. What do we have last week? We have a doji, right? What do we have this week? We have a doji and we have an inside week. So last week, uncertainty in terms of rates. This week, uncertainty in terms of rates. Hey, Anna, good morning to you. Welcome. And what I think may be happening here is we reaching the apex of the yield. My expectation is that yields do come down ultimately in 2024. The big deal is that the rates have been pushed back. We've spoken about that. Yesterday, the FOMC released its minutes, and it's basically confirming that, that the rate cuts that were originally priced in by the market were unrealistic. But the fact is that there was no real increase in the yields either. I think we're pretty close to the apex. So let's carry on looking for some sort of reversal here. Let's go down to the daily chart, just see if there is anything worth. And I don't see, when we say we're at the apex, we're just kind of moving laterally, right? So what is the meaning of that? Well, it's actually, the meaning of that, I think, has perhaps lost some of its, dare I say, importance. I'm not sure if that is the right way to describe it, but really the interest rates, especially with our risk market, not the key driver there. It's really the earnings. And yesterday, finally, we did have the NVIDIA earnings out, and they were terrific earnings and terrific market guidance. Excess demand. The company is dealing with any supply issues. That's I think they can improve there, but it's they definitely have an excess demand, which is terrific for that type of a business, right? So let's just take a look at NVIDIA. The price that we're seeing don't have, they are as at the close yesterday. This is the weekly chart. We discussed it. I think we discussed it on Tuesday. We drew in our support, our trend lines. Drew in our trend lines, and effectively we went from green to orange to red. And lo and behold, we actually have already seen the pullback. Hey, Kim, good morning to you. We've seen the pullback in NVIDIA start. So even before the earnings were out, there's profit taking. And this has had an important effect on the weekly chart. What's the important effect? Well, the RSI is normalized, or it's dipped back below 80. I'd prefer to see it perhaps come in a bit more, but the fact of the matter is that we were looking at this. Yeah, it is overbought on the monthly. It is overbought on the monthly. I tend to find that the monthly charts are extremely difficult for overbought readings. Extremely difficult. You can see if we go back here, it's overbought. And I think that the RSI loses potency the further up we go, because it really, yes, it's overbought, but by the time it corrects, we could have lost some serious capital gains there. So I tend to give the monthly chart less emphasis when it comes to the overbought, but I think the weekly chart has something to say, and I think that the daily chart certainly has something to say. The monthly chart, to me, in terms of timing purposes, is almost useless. So the idea here is we've got it coming back here towards the 80. Let's just fix this up. I've got to give the monthly chart perhaps some thought. Maybe divergences would be more important. Again, I just don't see the potential use of the RSI on the monthly chart. Just going back to the weekly, the idea here is I do see the RSI coming back in on that overbought condition. I think on the weekly chart, that's quite useful information to know. And if we go through to the daily chart, you can see that the RSI has gone all the way back to 50. So there's been some, I'm just zooming in here, just bear with me. You can see that just over the last 3 days, the profit taking has been absolutely noticeable, and that was ahead of the results. Okay, so we've got the pullback in Nvidia, and what we can do is, if we want to try and get some sort of longer term view on Nvidia, what I think we can potentially do, hang on, let me go to this tab. I'll go monthly here, but what I really want to draw your attention to is actually the cycle of the bull market. This, I think, has a lot of information in it when we have a longer term type of analysis to make. So first stage of the bull market, renewed confidence. Second stage of the bull market, improved earnings. I think that's where we are. The rampant speculation, I don't see it, and I admit I could be blind to it, because the Nvidia share price jumped 50% in 2 months, and that in of itself is abnormal, right? But I'm talking on a broader scale. I'm talking when we want to look at it on an index type of basis. I just don't see the froth of a rampant speculation, even though the monthly chart says, well, we are very overbought. We can certainly perhaps use let me think of The way I think we can use the monthly RSI, Anna, the way I think we can use it is with trend line analysis rather than with overbought and oversold levels. I think the trend line analysis will be more useful for our purposes on the monthly chart. Let me show you what I mean. So let's remove all the drawings, okay? And there's an overbought condition here. But what I suggest is, instead of taking a look at it on the overbought condition, take a trend line and draw in a trend line. And this to me seems to be more useful. So here is the violation of the trend line, right? Here is the pullback in the NVIDIA shares. So what happens is we can draw another trend line here. Let's see what happens when this trend line gets broken. Maybe, because it does look pretty close. If there's some sort of downwards break on the trend line here, we can follow the price action. It just seems that maybe that may be the more useful way to take a look at it. Let's do this. Put this one over here. I think that's the better. I think that's the better trend line. Here's where it violates it, but then it still takes some months before it comes. Yeah, this does look very steep. So maybe we get some sort of normalization this way. I've got to be honest. I mean, when I studied sort of the technical analysis course, and I specifically looked at RSI, of course there was a section on monthly RSIs. Just in terms of my own sort of experience, I find it very, very difficult to attach any meaning in terms of timing. Another way that we could potentially look at monthly RSIs, Anna, is breaks below 80. So, but it might be a bit late. Let's see, it breaks below 80 there. It breaks below 80 here. Maybe some sort of break below 80 on this latest RSI move is something that we should be looking for. But how long is it going to stay over 80 before it breaks below 80? That's the key question, specifically when the underlying fundamentals seem so good. You see, what typically happens with the underlying fundamentals and our Dow stages of the bull market. Remember that the most dangerous part of the Dow bull market is the rampant speculation. Now, what happens with the rampant speculation is you have huge PEs. Now, huge PEs in of themselves are not necessarily troublesome. I mean, look, if we get PEs that are stretched into the hundreds, yes, something would seem a bit odd then. But high PEs is the market telling you that there is going to be is the idea that there's going to be, or the market perceives there's going to be a high earnings, a high denominator to catch up with the high price, the high numerator. So as long as your earnings, as long as you're keeping up with the growth, which NVIDIA is doing, okay, it seems that there is some sort of fundamental base there, okay. Yeah. All right. Hey, Graham. Pleasure to have you on the web, on the live stream. Very, very good. Okay. And you're saying, look, to buy the dip. I think buying the dip in an uptrend, to me, is sort of a sensible approach. Shorting a rally in a downtrend, to me, seems to be a sensible approach, right? So, and of course, you've got to have your risk management in that. I mean, that's a completely separate discussion, and it's an exceptionally important discussion in that you need to have money management and you need to have stop losses. Now, something we've done previously, I'm just thinking what's the best way to do it, because I'm not sure I'm going to bring up Microsoft Paint. Let's briefly bring up Microsoft Paint. Let's just bring Microsoft Paint up very, very brief. I'll see if I can share my Microsoft Paint screen. I'm not sure I can. Bear with me a moment, guys. Okay, you should see my Microsoft Paint. I'm going to be very brief. I want to go back to the trading view charts. But something that's just worth mentioning again is, of course, you're not going to hit home runs. Nobody's going to hit home runs consistently. It's impossible. And it doesn't matter which method you use. If you trade enough times, you're going to be subject to the laws of statistics. And the idea here is that we've seen this before, is that you're basically going to trade towards a bell curve. And the truth of the matter is, trading, I think, there is evidence to support that it's not a normal distribution curve. It's actually a negative biased distribution curve. A negative biased distribution curve would be something like this. This would be let me show you a negative. Bear with me a moment. Negative wouldn't be bell-shaped. It would have a longer tail to the left. That would be negative. So you probably got a negative, but it's easier to understand on a normal distribution curve. Is that whenever you trade, you're going to get an average. Okay, you're going to get an average of your trade. So let's say you do 50. So what you'll do is you'll add up your profits and losses for 50 trades divided by 50, and you'll get what's called a mean. Okay, your average. And then what's going to happen with your mean is that you're going to trade very close to your mean. You're not going to be able to get away from your mean. Most of your trades are going to be it's going to be like a magnet. You're going to be trading within, it's called the first standard deviation band, right? Your negative and your positive first standard deviation. And on a normal distribution, you're going to hit this 34% of the time. You're going to trade below your mean. 34% of the time, you're going to trade above your mean. So 68% of your trades are going to be exceptionally average trades, But what you've got to do is you've got to understand that once you start going beyond the first standard deviation, so you start going towards your second standard deviation, you start going towards your third standard deviation, well, things then become very lucrative. The only problem is they don't happen all that often, right? So you'll probably get into your second standard deviation 13% of the time, and if my memory serves me, we're getting roughly, I think it's 2.4% of the time to your third standard deviation. I think that's, but it works in the reverse as well. Okay, you're going to go this way, and you're going to go this way. Well, you can't let it go this way. That's going to blow up your account, and that's where your stop loss comes in. So you can go to your first standard deviation. You just can't go to your second standard deviation. Okay, so I know it's getting messy, but that's what we are talking about. Does that make sense to you guys? So buying the dip and having some sort of money management in seems sensible, because you're kind of playing around on that side of your bell curve. Okay, it's kind of playing on that side of the bell curve. All right, I just want to bring up, bear with me a moment. I want to bring up TradingView again. I'm not. Okay, you should see the NVIDIA. What have we got here? The NVIDIA monthly chart. So that's what, we'll work around that. Could we go over working out stop losses using ATR again? Yeah, I think so. It's quite a. I'm just thinking. I don't think we can do it in this particular live stream, and maybe what we can do is we can arrange a specific live stream during the day looking at stop losses and ATRs, etc. So yeah, we can definitely do that. Let me give it some thought. Okay. Another chart that I just want to show you guys, I looked at yesterday, was gold. Let's just bring up gold here. I'm quite disappointed with gold. It was one that was on my watch list, and let's just go through to the weekly here. And I told you guys, that the trends are looking good, and we've got this higher trough, higher peak, higher trough, higher peak. But then we've got this lower peak that came in, and that showed that we were losing momentum. And once we started losing momentum, we effectively, let's get rid of all the drawings here. We started moving sideways for 2024. So besides a brief kind of spark in December, and that was, I think, largely because the market was expecting like 6 rate cuts for this year, and those have been pushed back. We're starting to get a movement towards the right. However, let's just zoom in here. And it does seem that gold is starting to show starting to show signs of life. Okay, so yeah, we can take a look at silver. I haven't looked at silver for a long time, Anna. Let's just take a look here. Here you can see, what have we got? We've got our reference candle, right? Can you guys see that? So last week's candle shows condition 1 of the reference candle, and then it looks as if we're about to get condition 2 and 3. So I think it's worth keeping an eye on to see if gold is starting to move, and if it is, we want to see the break above this trend line here. And what I can do is I can just put in point number 1. So we want to see a break by point 1. So if the RSI breaks above point 1, that's not a primary signal, that's sort of a secondary signal, but it's a potential warning for us to look for sort of trend following indicators to see if we're starting to get a movement up in gold. So if gold is starting to point its way up, then what we can do, Kim, is we can look at the dollar. Yesterday we said, well, the dollar is moving sideways. Well, if gold's starting to move up, maybe that's telling us that the dollar's ready to drop. Maybe it's telling us that. So let's just have a quick look at the dollar, and then we can take a look at silver. It's not one that I've looked at recently, but just taking a look at the dollar here. Can you guys see the reference candle? We've got the condition 1, condition 2, 3. Now, this is it's a difficult chart to read. It's not easy because I do feel, and I've said this before, that over 2024 we are going to get that drop in interest rates, and if we get that drop in interest rates, we should get the drop in the dollar. The problem with that is that the market action has been completely contrary to what I've been thinking is going to be the evolution of rates in 2024. But now that we're starting to get the FOMC minutes out, and there's no big rate adjustment for the FOMC minutes, maybe that's the signal where we kind of get the dollar starting to drop off here. And hopefully that brings in that volatility we spoke about yesterday, right? The first thing to note is that we are getting a reference candle on the US dollar. So that's very interesting to see. We can take a look at silver. Again, I'm looking at this quite blind, Anna, so I'm begging your pardon. Let's just take a look at XAGUSD. So that would be silver. We'll just use the FXCM instrument here. And okay, so I think there's two ways to look at this. The first way would be just to understand that last week again looks to be the condition 1 of the reference candle, and then we still need condition 2 and 3, and it does look as if there is a sign of life here. We've got that secondary signal coming in on the RSI, and we'll just see if it pops above 50. But the second way of looking at this, let's just take a look at relative strength. Let's just go XAU USD, and we'll divide that by XAG USD, right? And we can just put that in. All right, so what's the big takeaway here? Well, it's basically moved flat there, and we do seem to have sort of an upwards slope there. So it looks as if gold is sort of the stronger performer of the. Sorry, I'm getting the camera out the way. So it moved sideways. That's this guy here. That's this guy here. But now it looks as if it's moved sort of northeast. So it does look as if gold may be the outperformer amongst the precious metals. Okay. All right. Does that sort of help you guys? I hope it does. If there's any questions, just go ahead and type those in. Let me think. Is there anything that I've left out? No, I think this is. Why do I compare them? No, the only reason I've compared them is because we've looked at XAU USD, so we've looked at gold, and asked, let's take a look at silver. It's not one that I've looked at in any great depth. I just wanted to get an idea, Mia, of which precious metal was outperforming the other. So it looks as if gold may have just the slight upper hand there. So nothing more than that. All right, I think we can wrap up here. If you enjoyed this, go ahead, click on that boost button. I'll set up another live stream for tomorrow. And then let me just think how we're going to work this ATR. I think it would have to be some sort of separate live stream there. All right, guys, so have a great day ahead, a great evening, and we'll do it all again tomorrow morning. Thanks very much, guys.